Hey super swing traders, I hope you're doing good. Today we're going to take a look at some charts and see where we can identify supply and demand order flow and trade it for income. Let's take a look at the Kiwi CAD and see where we can find supply and demand areas and trade it for income. Alright, on the monthly it looks pretty tricky, so I'm gonna extend it and see what I can find. So there is a level of supply up here. There's a level of demand right here. And there's another level of demand right here. Okay. And this is in a clear downtrend. It's in a clear downtrend. And yeah, that's what we have. So price created this area of supply, tested it once, dropped, and then found or rallied up, and then it just, this trend line down is just preventing it from going any higher. And then it came into this area of demand, tested it once, testing it again for the second time. So that's what we have on the monthly. So our monthly is in a downtrend, but it reached our area of demand, so we can't short right here. We can't short. We want to wait to see what price does, because we can set our buy orders right here, but like I said, this would be counter trend, because our highest time frame is suggesting to go down, but it doesn't tell us to just blindly buy right here. We want to wait to see what price does here. But there are two levels of demand down here, so more than likely price is going to reverse here or reverse here. So let's take a look at what our middle time frame says. Our middle time frame says there's a downtrend right here. There's a level of demand down here. Level of supply up here. Possibly a level of supply right here. Okay. Let's take a look at the daily. Daily, there's a really steep trend line right here. Obviously supply up here. Okay, and then there's a really low demand zone down here. Okay, but just keep in mind that this area right here, okay, let's see, draw a horizontal trend line. This area right here, is where our higher time frame demand zones are already at. Yeah, down here will be your entry. Down here, if you're trading the monthly, weekly, daily, you will want to wait until it gets down here before you buy. If you're trading higher time frames, you can use these larger zones, but just make sure that you know what they are, and they are exactly larger zones. So you want to wait until price gets down here before you trade it. But just know that you don't want to short anymore right here, because price has already reached a higher area of demand. So you don't want to short here, because you're going up against a higher time frame demand zone that you can easily, let's say you set your short right here at this little baby bearish engulfing candle here. You say you're short up here and it's already reached this. Oh, yeah, never mind. Yeah, you say you're short here and you already reached this area of demand, or even the monthly. The amount of buyers down here are gonna wipe out your little supply area here. So this is the reason why we don't want to short when we're so close to the area of the higher time frame demand zones. Okay, so we want to either wait until you get down here to go long, or even wait until it drops here and then start making our demand zones, and then you buy. Or else you look at your higher time frames. If it starts bouncing right here instead of all the way down here, then you wait until you just wait until it starts creating areas of demand on its way up, and then you buy. But ideally you would want to wait for, ideally you would want it to confirm that it's going to go up higher and break this supply zone and break this supply zone to go long. But if you don't want to, you can wait for a valid counter trend short up here that is within this area of supply. On the 4 hour, we have, see, they made this big drop, so this is obviously supply. Rallied, and then base, rally, drop. So yeah, this is just a complete mess. But I would say that this is not demand, because this is just all compression. This could be supply. So it did a drop, base, drop, base, drop. Okay, so let's say it did drop, base, drop, base. So yeah, it's probably going to, it's more than likely going to drop more, and this is going to continue to respect this trend line and drop more until it reaches this area of supply at least, or even deeper into this area of demand down here on the daily, before it's going to start to react to that zone and start moving up. So if this starts, so if you're trading the weekly, daily, 4 hour, you will want to wait until the daily, until this trend line is broken before you start going long. And then you would want to short up here, or at least go long and take profit up here until this area is removed, before you want to continue to go long all the way up to this area of supply on the weekly. If you're trading the monthly, weekly, daily charts, then you would want to wait until this area is broken before you even go long, because this could push you down lower, or wait until this area is broken. Wait until the monthly or the weekly is broken before you even think about going long, because our overall trend line is saying to go short, but we can't, because this area of demand is in control, and this one is as well. So yeah, your best bet is to just wait until this reverses to go long, because you still have a lot of room for potential to get up here, and then if this does break, you have more potential to go up to this area of supply. So just be patient, just wait and see what the markets give you. And that is the analysis on NZDCAD. I hope you found this video analysis really helpful, and I'll see you in. Thank you for watching this video. Please remember to give it a thumbs up if you enjoyed it, and leave a comment below. If you're not already subscribed, please click the subscribe button below and click that little bell icon. That way you'll get notified of the next video that I publish. Thanks again for watching.